Hi friends, welcome to the channel JAIIB and CIB Made Simple. So this is our unit number 31 of IEIFS. Chapter name is Capital Market and Stock Exchange. So before going into the chapter, let's see what are the topic which we have to discuss. So we will see the introduction, what is primary market, what is secondary market, stock exchanges in India, what are financial product and instrument in the secondary market, SEBI's regulatory requirement for corporate debt securities, key terms in the capital market, types of capital issues in the primary market, eligibility norm for issuing capitals, intermediary in the primary market issue, ASBA application supported by blocked amount, qualified institutional placement, that is called QIP. So basically we will cover all this topic in two parts. In the first lecture we will cover 31.2 to 31.6 and the remaining 5 to 6 topic in the next part. So let's get started with our first part, which is the introduction. So friends, starting a business, great, but first you need money. So where does it come from? Let's break it down. So the first thing is, capital. Yes, capital. So what is capital? Capital is the money needed to start or run a business. Money that is required to start or run a business is called capital. For example, your lemonade stand need $100 for lemon, sugar and cups. That is your capital. Means suppose you want to start a business, suppose you want to run a business. How much money is required? That is called capital. But the problem is that what if you only have $50? You don't have $100, you just have only $50. So in that case, you need external funding. In that case, you need external funding. This is the problem. Now the question is where to get the fund. This is the question. Where to get fund, right? So yes, banks is there, loans are there, right? So what you can do, extra $50 which you require, you can borrow from, but you have to pay back how much? You have to pay back $55, right? So this extra $5, this act like a interest. This extra $5 act like a interest. The tax deductible, so it cut your tax bill. And the bad point is that bank may ask for collateral like your bike as security, right? So if you take loan from a friend or from family, like suppose you ask your mom, lend me $50, I will pay you back. So in that case no interest will be there, but it is risky for relationship. And if you take public money, yes, public fund is also another way to raise fund, that is from big business. So by selling the share, you will sell your share, right? What is share? This is just like tiny ownership slice. Or you will sell debenture, right? You will either sell share or you will sell debenture, right, to the strangers. Now comes the rule book. The rule book is that SEBI and Companies Act. This SEBI act like a market referee. It ensure no scam when company raise public money, right? SEBI ensure no scam when public raise company money. For example, before selling share, a company must share its report card with SEBI. So this is the rule book, SEBI and Companies Act. Then comes primary market. What is the meaning of primary market? See, this is a marketplace for fresh share. New securities or new share are issued to raise capital. So a marketplace for fresh share or bond is the primary market where new shares are born. So there are two ways to sell. Either you can say public, either you can say either you can do the public issue. So public issue means anyone can buy, right? When I say public issue, it means anyone can buy, like IPO. Take the case of IPO, initial public offering, like a company stock debut. And another way to sell is called private placement. Yes, so as you can see, public issue is one technique and the other case is the private placement. What is the meaning of this private placement? So private placement, so these are basically shares which are sold to the big investor. Shares sold to the big investor, that is called private placement, right? So I hope that makes sense to you. So we are talking about what is primary market. I told you primary market is a place where new shares are born, a marketplace for fresh share or bond, like a new stock launch. And there are two ways to sell. Either you do the public issue, which means anyone can buy, like an IPO. IPO is a kind of public issue. Another case is the private placement. Private placement means shares sold to selected big investor. So then comes helper. So who are helper? So helper are the merchant banker. Merchant banker act like a helper. right? So what they do, they cook up the deal, they underwrite and promise to buy unsold share, right? So that is what is done by the merchant banker, or we can call them, intermediate. So let's recapitulate the key point that we have gone through just now. So the first point is that, I told you that capital, right? Capital is, is act like a business fill. Capital act like a business fill, right? And the size of capital, it depends on your project. Size of capital depends on the project. Then we talked about sources of capital. So sources can be loan, right? Loan means cost interest. Sources can be friends. So in this case, if you take if you take loan from your friend, so obviously your relationship will be at stake. Then sources can be public. Public means, share or debenture. Then we talked about SEBI. I told you this Security Exchange Board of India, right? They keep fundraising. They keep public fundraising fair and transparent. They keep public fundraising fair as well as transparent. And then we talked about primary market. So primary market, they act like a new shares playground. New shares playground, right? So a primary market is used IPO or private deal. Either you can use IPO or it can use the private deal. So this is about the primary market. Fine. So see, simple rule is that, secondary market, but but for a stock, not for phone. Let's explore this trading world and India's stock exchange. So the secondary market, they act like, used stock bazaar, right? So they act like a huge stock bazaar, right? So what it does, it lets investor trade already issued stock or bond, right? It let the investor trade already issued stock or bond, unlike the primary market for new share. For example, suppose you buy Infosys share. Suppose you buy Infosys share from another investor, not Infosys itself. You are buying Infosys share from another investor. You are not buying from Infosys. Just like buying a used bike from a friend, not the showroom, right? So that is called, secondary market. So there are two types of secondary market. The first is called, auction market. The first is called auction market. Auction market means stock exchange, like, eBay, right? eBay, which means, so it is the place where buyer and seller bid publicly. Buyer and seller, they bid publicly, right? For example, take the case of BSE, take the case of NSE, Bombay Stock Exchange, National Stock Exchange. These are, auction market. And the second kind of market is called dealer market. Dealer market means, over the counter. So OTC. So what happened in dealer market? Private deal happen. Private deal happen between brokers, right? Private deal happen between broker, like a small company not listed on the big exchange. So there are two kind of market: auction market and dealer market. In auction market, what happened? That buyer and seller bid publicly, like BSE, NSE. And in dealer market, what happened? Private deal happened between broker, like a small company not listed on big exchange. Then why does it matter? It matter because of, price discovery, right? So here you can see the keyword written price discovery. It matter because of price discovery. It's a real time value of the stock. So when I say price discovery, it means, real time stock value. It shows the real time stock value, right? Like, seeing trending price on OLX. Then investor control. One other point is, investor control. It matters because of investor control. If a company perform poorly, its stock price will drop, a warning sign to the manager. Suppose a company is there, it perform very poorly. So what will happen? Its stock price will get decreased. This is basically a warning signal for manager. Then comes, bank services. So they offer what? They offer demat service. Demat account. Demat account, digital wallet for stock. They offer loan against share. As you can see, demat account, loan against share or credit against security, right? Like, pledging gold for cash. Then they also offer you settlement. Settlement, it ensures smooth money share swap. So demat account, loan against share, settlement. So these things are offered by, services. Right. So the secondary market we are talking about, the secondary market offer you demat account. The secondary market offer you loan against share. The secondary market offer settlement. Now, if we talk about the India's stock exchange, so the big player are BSE, that is called Bombay Stock Exchange. It was established in the year 1875. This is Asia's oldest, like the grandfather of the Indian market. And it was the first to get permanent SEBI recognition. Then comes NSE, National Stock Exchange. So it was established in the year 1992. And you know that this is a tech savvy rival. And this was introduced, they introduced electronic trading. So remember, NSE was the first that introduced the electronic trading. No more shouting on the floor. Earlier, they used to shout on the floor. Now, no more shouting on the floor. Electronic trading happened through NSE. Then comes CSE, Calcutta Stock Exchange. So it was once famous, now it is inactive, like an abandoned theater. So some new kits are there, like Metropolitan Stock Exchange of India. Right, it was started in 2013, underdog. India's INX, that is India's International Exchange. So, so basically they trade foreign stock in Gujarat Gift City. They are subsidiary of BSE. They are located in IFSC Gandhinagar. Then comes OTCEI, that means Over the Counter Exchange of India. So they helped a small company raise fund. So let's recapitulate what we have covered so far in this particular slide. So friends, I told you about secondary market. What is so big about secondary market? I told you. So trading use stock, trading use bonds. Right. Then I told you two types are there. What are the two types? So a stock exchange is there. A stock exchange is there like NSE or BSE. And the second type I told you is the OTC. That is a kind of private deal. OTC is a kind of private deal. So two types I told you. Then we talk about the benefits of it. So what are the benefits? I told you fair pricing, right? Investor power, fair pricing, investor power, bank support like demat, like loan. These are the benefit. Then I told you about the major exchange. So this BSE is the oldest, NSE is the largest, and some Nike player like India INX. Fun fact is that BSE, Sensex, and NSE Nifty, they are like temperature gauge of the Indian economy. Right. Bombay Stock Exchange, Sensex, and NSE Nifty, they are they are temperature gauge of the Indian economy. Now friends, let's talk about the demutualization of the stock exchange. Imagine your local Kirana store suddenly become a big supermarket. That is what happened when Indian stock exchange demutualized. Let's decode this change and how trading went digital. So basically, what is the meaning of demutualization? It means from club to company. From club to company. That is what we call demutualization. Let's understand it. So basically, what does it mean? So it means stock exchange changed from broker owned club to shareholder owned company. Earlier it was broker owned club, and later it become shareholder owned company. Fine. So that is the meaning, like Flipkart moving from founder to investor. That is called demutualization. So what used to happen before? Let's have a look. So before broker owned, broker managed, and broker traded on exchange. So it was ownership, management, trading right, all were done by the broker. So total control was in the hand of broker. Since total control was in the hand of broker, so this was a kind of conflict of interest. This was a scenario of conflict of interest, because broker owned it, broker managed it, broker traded it on the exchange. So complete control was in the hand of broker, and it causes the conflict of interest. Right. Now what happened? After what happened? That ownership, so it was separated. Right. Like if we talk about the ownership, so ownership went into the hand of public shareholder. Ownership went into the hand of public shareholder. Like like you can own NSE share. Then management. If we talk about the management, so professional CEO. Management went into the hand of professional CEO, not broker. And finally, trading right. So if we talk about the trading right, what happened? In the trading right is separately granted. Trading right is separately granted. Who did it? BSE, NSE, OTCEI. What is the full form of OTCEI? Just now told you, over the counter exchange of India, right? So these entity like BSE, NSE, OTCEI, they did it. Let me give you one example. You can think of chai shop run only by tea lover. That is the broker. You can think of chai shop only run by tea broker. Tea lover, they are the broker. After demutualization, what happened? Chai shop become a Starbucks. Earlier, what used to happen, that chai shop were run by only broker. Just I'm giving you an example to make it more clear. But after a while, what happened? That this particular chai shop become a Starbucks. It was owned by investor. It was owned by investor. It was managed by professional. Owned by investor, managed by professional, but is still serving tea, but is still serving the trades. So that is the point. Now then comes, stockbroker. What is the meaning of a stockbroker? A stockbroker means your market guide. A stockbroker means market guide. So who are the broker? Broker are the SEBI registered trader, like licensed tour guide for the stock market jungle. So broker, they are, a SEBI approved trader. Just remember this point. They are approved by the SEBI. And who are the sub broker? Sub broker are the assistant to the broker. Right? Travel agents, looker partner. The key point is that both must be SEBI registered to protect you from a scam. Either broker or sub broker, they must both be SEBI registered. Then let's look at the depository system. So no more paper share. So before 1996, what used to happen? That physical share certificate used to be given. What we call it? Physical share certificate. Before 1996, physical share certificate. It was easy to lose. It was easy to forge, like paper train ticket. But what happened after 1996? That demat account comes into picture. Demat account, like digital share wallet, like Paytm for stock. What is the benefit of this demat account? Safety. Yes, it ensures safety. This is one of the benefit. It ensures safety means no theft, no forgery risk. It ensures speed. A speed means instant transfer. It ensures cost saving. How cost saving? No stamp duty on digital transfer. No stamp duty you have to pay. And it ensures the liquidity. You can see theft and forgery were reduced. Cost were cut. Right. Liquidity were improved. Let me give you one example. For example, buying share used to be like buying property. Tons of paperwork in earlier. Now it is just UPI for a stock. Click and done. That's the difference, which were made by the depository system, which was introduced in the year 1996. So friends, let's recapitulate the key point which we have covered in this particular lecture, in this particular slide. Friend, if you want such kind of lecture where everything is explained in the lucid manner, and not only that, we also provide you recapitulation of every point at the end of each slide as well as the end of the video. You can enroll in our course. For more detail, you can WhatsApp me on this particular number. So friends, let's recapitulate what we have covered in this particular slide. I told you about, demutualization. What is the meaning of it? I told you that, these exchanges become companies. These exchanges become company like Bombay Stock Exchange, like National Stock Exchange. That is called demutualization. In the case of demutualization, what happened? The broker lost monopoly. Monopoly was lost by broker. Right. Public got ownership. Yes. Ownership was given to the public. So this is what happened, meaning of demutualization. Then we talk about, broker. Then we talk about, sub-broker. What we come to know about these two? I told you that they are the licensed stock market guide. They are the licensed stock market guide. Fine. Then we talked about the depository system. What is the meaning of depository system? I told you they are like, digital share. They are like, digital share. Safe, fast and cheap. Demat account is a must for that. For depository system, what we require? Demat account, dematerialized account. Now friends, let's switch our focus to the key regulation and the future of the depository service provider in India. So your share need a safe home also. In India, we have got two ultra secure digital vault for stock. Let's see how they work and who guard your investment. First of all, what is the meaning of depository? Simple definition is that a digital locker. Whenever you see this word depository, it means a kind of digital locker. It's kind of digital locker for your share. Digital locker for what? Digital locker for share. Just remember it. Right? No more paper certificate. So like your bank hold money, depository hold share electronically. So you can think of them like bank. What bank is holding? Bank is holding money. Similarly, this kind of depository, let me give you some example. You might have heard the name of NSDL. You might have heard the name of, CDSL. So these are the depository. So like bank held money, similarly these depository, they held share electronically. So what is the rule of the game? The rule of the game is that, have a look. The rule of the game is that they must be a registered company, right? Like any legitimate business, they must be SEBI approved. They must have SEBI approved rule, right? So these are the rule. Then comes, safety first. What's the meaning of safety? Safety means they must have hacker proof system. They must have, hacker proof system. That is called, SEBI. They must have a hacker proof system like a bank's firewall. They can't deal directly with you, right? So they must approve one or more SEBI registered participants. So participant must be there. Then they can't deal directly with you. They can deal only through the participants, like bank branches. Who are the participants? Bank branches are the participant. They can't, deal directly with you. They can only deal through the participant. Just as Amazon needs GST registration and secure server, similarly depository needs SEBI node and cyber armor. Now the question is, how does it work? So your access, the first thing they need is your access, which means, through DP. What is DP? DP means, depository participants. So bank, broker, like ATM machine for share. So it works your access through DP. Like who are the DP? Like, bank, broker, right? Then they need the record. So record means what? So depository track DP. Remember, depository track depository participants. DP track your share, like a warehouse tracking which shop hold which product. Similarly, DP track your share. Fine. And one more thing is that safety is the first thing. Safety means, if they mess up, if they lose your share, they must compensate you. Okay. So that is called indemnify investor for loss due to their participant negligence. So India's two share vault, India's two functional depository are NSDL. NSDL, it was established in the year 1996. Full form is National Security Depository Limited. And who are the promoter of NSDL? NSE, National Stock Exchange, IDBI, UTI. They are the promoter of NSDL. And account number always start with IN plus 14 digit. Then we have CDSL. CDSL, Central Security Depository Limited. Okay. So who are the promoter? BSE and banks are the promoter. And account number is 16 digit. So NSE, National. So NSDL, National Security Depository Limited. CDSL, Central Security Depository Limited. Fun fact is that NSDL is like the older, experienced sibling. CDSL is the agile younger one. So let's recapitulate what we have covered in this particular slide. So friends, in the previous slide what we have discussed, we have talked about the depository. What I told you about depository, they are depository act like digital share vault. They act like digital share vault. Then I told you some rules are there. What kind of rule? SEBI registration. SEBI registration, anti-fraud system, access. If we talk about the access you can get to this depository only via DP, right? Like DP, who are the DP? Depository participant like bank and broker. Only via DP you can get access to your depository, right? Then we talked about the safety. Yes, I told you that they are liable if your share vanishes due to their mistake. They are liable. If suppose your share vanished due to their mistake, they are liable. So that is their liability. Now friends, let's look at some key financial product in the secondary market. So friends, if we talk about the key financial product, So first one is, equity share. What is the meaning of equity share? See, suppose you are owning a slice of company, like buying 1% of your, friend startup. That is called, equity share. So there are some risk and rewards. So what are the risk and reward? Voting right. Yes. Voting right means, you get a say in big decision. You get a say in big decision, like choosing the startup logo. Then comes dividend. So voting right is there and dividend is there. Dividend means, profit share. So we are talking about equity share. So there are risk and reward like voting right. You get a say in the big decision. Then we talk about the dividend. Dividend means profit share, which means if the startup make money, that is called dividend. Then there are some special varieties of it, like right shares. What is the meaning of right shares? If we talk about the right share, so this is called first dips offered to existing shareholder. So new share which are offered to existing shareholder, that is called right shares. Like a loyalty discount for regular customer. So this loyalty discount you can think of them like right shares. Then comes bonus share. What is the meaning of bonus share? Free extra share, like buy 10 pizza, get one free deal. That is called bonus share. And what is a right share? I told you, right share means loyalty discount for regular customer. Right. Let me give you one example. Suppose take the case of Reliance. Suppose this Reliance, they issue right share. Suppose the Reliance issue right share. Right. So you as existing investor, you can buy more at a discount to keep your ownership percentage intact. So you can buy more. So if they issue rights here, you can buy more at discount. Right. To keep your ownership percentage intact. That is the meaning of rights here. Then comes, fixed income disease. So what are the fixed income disease? The first one is called preference share. So preference share is the hybrid of stock and bond. Fixed in dividend but no voting right. In this case, there is no voting right. You are entitled to fixed dividend, right? So it is the hybrid. Preference share is the hybrid of what kind of hybrid? Stock and bond. If you look at the types of preference share, they accumulate like unpaid rent. Landlord gets it eventually, right? And then comes cumulative convertible preference share, which means it can switch to equity later. Whenever you see this word convertible, it means share can be converted to equity later, right? Then I told you about participating share. So participating share, it means extra profit. Extra profit if company does really well. Suppose company does well, then in that case you get extra profit. So that is called participating, like bonus tip for SEF. Safety net is that you should pay it before equity holder if the company liquidate, right? So but after, you can say it is paid before the company liquidate, but after bank and debenture holders. Then comes government bond, right? Government bond and debenture. What is security receipt? They are issued by the securitization and reconstruction company to IB. IB means institutional buyer, proving undivided right in the securitized financial asset. That is called security receipt, right? Then comes government security. So this, they are ultra safe. Why they are ultra safe? Because they are backed by the RBI. They are backed by RBI. That's why they are extra ultra safe. And the payment is made, half yearly payment plus principal plus maturity. Principal at maturity you get. So that is called government bond. Then comes debenture. Debenture act like company IOU. So debenture are secured against asset. Debenture are secured against asset. Like Adani debenture. This means loan debenture against their port. Then comes stamp duty. Yes, it attracts stamp duty. Applied. Regular bond. Unsecured loan to company. These are called regular bond. For example, suppose you are buying 10-year government security at rupees 1000 with 7% coupon. So it simply means that rupees 35 you will get every 6 months. and then you will get rupees 1000 back after 10 year. Security receipt we have already talked about. What is security receipt? I told you these are the piece of securitized loan like crowdfunding bad loan. Buyer, only big institutions are there for security receipt. So let's recapitulate what we have covered so far. Right, the different types of different types of shares we are talking about. First of all, we talk about the equity share. I told you in this case ownership, right? So voting right is there, plus along with voting right dividend is variable, that is called variable dividend. Then we talked about the two kind of equity share like bonus share, and we talk about the right share. So what is bonus share? I told you, right? In the case of bonus share, what happened? So in the case of bonus share, that free extra share. In the case of right share, free dips offer to the existing shareholder. After equity share, we talked about the preference share. What is preference share? In the preference share, you get fixed dividend. You get fixed dividend. You do not get any voting, not voting, right? And cumulative preference share and convertible preference share are a special type. Then we talk about the bond and debenture. What is bond and debenture? So bond is basically loan given to a company. Bond are mild spicy, so you should balance your plate, right? That is what you have to do. Then if we talk detail about the bonds, right? So bond, there are different terminology associated with bond like zero coupon bond, right? So we will cover all these in the part 2 lecture. So let's recapitulate what we have covered so far, because recapitulation is very important. Let's review. So friends, we started with capital market. I told you they are capital act like a business field, right? So what are the source of this capital? The sources can be sources can be loan, right? Cost instrument. Sources you can take from friends, or you can take from public, which means share and debenture. And SEBI, they make rules and guidelines so that to make the market fair and transparent. Then we talk about the primary market where new share are issued like IPO, right? IPO means initial public offering. This is called primary market. Then in the next slide we talked about secondary market where stocks and bond are traded, right? Two types of two instrument. I told you stock exchange and another is the OTC exchange. Two kinds of market are there: stock exchange market and OTC market. Benefit is that fair project, investor purposes and demat account. Then maximum majority are in BSE and NSE. Then we talk about the ownership, right? I told you about the ownership. This is public shareholder management. Yes, we talk about the difference between these two. Demutualization, I told you. Demutualization means exchange to companies. That is called demutualization. So this led to the conversion of implementation of BSE and NSE. In the case of demutualization, what happened? That these three functions, ownership, management, and trading right, they are given to the three different stakeholders. Then we talk about broker and sub broker. they take license from the government. Depository system are like digital share. They are issued in the demat form. Then we talk about brokers monopoly, right? Public ownership. This is about demutualization. And some name of the depository are NSDL and CDSL. So I told you depository act like a digital share vault. The rule is that SEBI registration is mandatory. Anti-fraud system is required, right? So NSDL, CDSL, these are the depositories which are available in our India. Then comes equity. Equity means ownership. Ownership in which include voting right also, and variable dividend also. Right. So two types of equity we have talked about: bonus equity and right bonus share and right share. So bonus share is some extra bonus that you get, and right share, right share we talk about. So right share, what happened? New share offered to existing shareholder in proportion to their holding. That is called right share. Preference share, in this case you get fixed dividend, non-voting right, right? And I told you that bond oblique debenture. So let's end our discussion here. We will continue with our session in the next session. Hopefully you enjoy the session. Thank you.